The first half of 2024 is over, and stocks have did very well so far in the first half. The S&P 500 was up 15%, and the Nasdaq was up 18%. And historically, a strong first half of the year in the stock market usually leads to more momentum, and a strong second half with more gains ahead. And the first 10 trading days of July, according to Bank of America, is historically the strongest. Pretty much the strongest period in the stock market, up about 1.5% on average. And with the election this year, historically an election year is also very strong for the stock market. So that's some reason to be optimistic. We have Tom Lee up his S&P 500 price target from 5,200 by the end of this year to 5,800 due to stronger earnings per share, which is higher earnings growth from 260 to about 280 in his opinion, because companies are doing better. And then the earnings multiples might be slightly above 20, maybe 21 perhaps, which would bring us to that price level of 5,800. So that's not necessarily that far-fetched. I still think we'll be close to about 5,600. We might touch 5,800 at some point, but I think at some point, especially with the elections coming up, we might see a little bit of a decline back to 55, 5,600, but who knows? We'll see what happens. The S&P 500 is about 5450-ish right now, so we have a lot of time. And historically, I think July will be strong. We might have some weakness from the August through October period, but I think November and December should be really, really strong. And pretty much should end up being a Santa Claus rally. Obviously, we have to see. Tom Lee also made a prediction that the S&P 500 would likely hit a level of 15,000 by 2030, and I agree with that due to all the productivity gains we've been seeing with artificial intelligence and demographics for millennials hitting the prime age in the workforce, earning the most money, and in their prime spending years in terms of taking on debt to buy houses. That'll likely drive stock market returns for the next few years, in my opinion. So that's not necessarily far-fetched. And tech analyst Dan Ives thinks we're at 9 p.m. in a party that'll go all the way to 4 a.m. in this AI-fueled bull market in this fourth industrial revolution, with Microsoft and Palantir being key beneficiary plays. He also thinks that cybersecurity plays like Palo Alto Networks, Zscaler are also good plays for this. He thinks that the Nasdaq could hit 20,000 by the end of this year and be up about 15% from current levels. He thinks Tesla is the current most undervalued play for AI right now. And I kind of agree with that. Tesla shot up today about 8 to 9% by beating their deliveries for the second quarter. Their deliveries came out at 444,000 compared to the 438,000 expected. This is down 5% from last year, but that's better than from the first quarter. That was down 9% from the previous year. So it seems that their misses year over year, it's good that that's starting to decline. And I think, in my opinion, that the worst for Tesla is behind us. I think that Tesla's growth story is hitting an inflection point. We have that August 8th robotaxi day, and I think all eyes for investors will be on that day. So I think Tesla hit its local bottom. I think, in my opinion, that Tesla's on its way to a $300 price target, at least in the short to medium term. I wouldn't be surprised if Tesla eventually hits a price target of 1,000 in the next few years due to not only its electric vehicle business, but its robotaxi and autonomous vehicles, but also it's for its robotics segment with its humanoid robots called Optimus. So I see a lot of growth of Tesla ahead. And I also want to talk quickly about Jerome Powell's speech. He made some comments today pretty much saying that the recent inflation data we've seen for the month of May looks pretty encouraging. So he's getting more confident that we're seeing a disinflationary path. However, there's still a long way to go before we hit that 2% inflation level. And he doesn't necessarily see that happening this year or even next year. So there's still a way to go, and he wants to see more data before that happens. He still acknowledged that, the labor market's strong and unemployment being at only 4% is strong, historically at least. So it's good that he acknowledged that recent data for inflation is encouraging, but there's certainly some more room to go, and he wants to see more data. Overall, I think the stock market will react, as I said earlier, will be a very strong July. We might see a little bit of August through October be a little consolidation, but I think by the end of the year for that Santa Claus rally, we'll hit those predictions that Dan Ives and Tom Lee had mentioned before.